Welcome to the Wealth Studying Podcast. This is episode 509. Today is January 30th, 2026. I'm your host, John Pugliano. I'm also the founder and money manager at investablewealth.com. Well, what's going on with silver? That's what we're going to cover in this episode. I need to preface what I'm going to say about silver with the following. Now, I haven't talked about silver up till now or even the big run-up that we've seen in gold. And I haven't talked about it for a number of reasons. The primary reason being I generally, or very infrequently, sometimes never, invest directly in commodities. Okay, so things that I don't do, I don't talk about. Now, that doesn't mean that at some point in the past I haven't invested in a gold ETF or something, or doesn't mean that in the future I won't. It just means that generally, like 99% of the time, I don't. And so therefore I don't talk about it. Now, there are a number of reasons I don't invest in commodities specifically, but it's just not something I generally invest in. The big reason, and this is why I'm an equity investor, this is why you always hear me refer to myself as a money manager. I could say portfolio manager because maybe that has some more cachet to it, but I don't care about that. I'm a money manager. I use that term because I think it's very descriptive. A lot of people that find themselves in a bad financial way are that way for a reason, because they're not properly, not only not managing their money, but more importantly, they're not managing themselves. So money manager, kind of a play on words. In any case, I focus on managing assets. And while I understand that commodities are an asset class, the problem I have with them is that they're very hard, is that they are what they are, which is to say they're fungible, right? An ounce of silver is an ounce of silver. And if you try and sell that silver, you're limited to whatever the spot price is at the particular time. Now, what I like about equities is that all companies are different. Just because a company is a tech company or a mining company or a telecommunications company, just because it's in that particular sector or that particular industry, it doesn't mean it's fungible just like all other companies in that sector or in that industry. Companies have unique management, they have unique moats and comparative advantages, and because of that, they have histories of profitability that can go back and be studied, and from those assessments of their prior earnings and a management's ability to increase sales and profits, you can then make educated guesses, and we'll call them assumptions, about what future profits are likely to be. Again, you can't do that simply with silver. Silver is silver, gold is gold, oil is oil. Yeah, it's driven by supply and demand, it's driven by fear and greed, but there's not much beyond that to distinguish it. With a company, there's so many more aspects of why one company can be worth more or less than another, and therein lies an arbitrage. And so you can make assumptions about where future profits are going to be, and with that you can come up with a net present value. That net present value then allows you to make an assumption by looking at the current stock price as to whether that company is overvalued or undervalued or fairly priced. Okay, so before I make any investment, I start with those fundamental assumptions. What is the stock price? What is the perceived value that I have based on estimates of future earnings? And do I think it's a reasonable price to pay for that stock? I start there, and then I look at trends and technicals and charts and all the other things that you hear me and other people talk about. But I start on that fundamental premise of where are future profits going to be, and how is the price of the stock today in relation to where those profits will be in the future. I digress too much. Bottom line, that's why I invest in equities, and that's why I don't focus on commodities. Because regardless of where the price of oil is, or regardless of where the price of gold or silver or copper or lead or whatever is, there are going to be companies within the supply chain of all those commodities that have the ability to turn a profit regardless of how that commodity is priced. I want to sift through the chaff and find those profitable companies. So rather than just focusing on silver, for example, I want to look at the whole supply chain. To get silver out of the ground, you need big equipment, right? That means companies like Caterpillar and Cummins Diesel. And when you get it out of the ground, you got to haul it around, right? So that means railroads, trucking companies, other logistics. And then you've got to refine it. And then further from there, you take that silver and you turn it into products. Whether we're talking about generators from Generac, or smartphones from Apple, or computers from Dell, or switches and wiring and connectors from Flex or Amphenol, or sensors from Johnson Control or Honeywell, right? You see how this starts with a commodity and then works its way through the supply chain, or what I would more appropriately call the value chain. And I want to own the value, not the commodity. Again, I digress. Bottom line, the only reason I'm even taking questions about silver is because so many people have asked about it, and I recently submitted a segment that will appear on their Survival podcast. That's my friend Jack Spirko over at TSP. And rather than duplicate what I said there, I'm simply going to take an excerpt of that segment and play it today. And that'll sum up my thoughts and views on silver. So here it is. You know, with all that's going on and with silver getting way above $100 an ounce, I'm going to, as best as I can, drill down, hit the high points. This is literally something that we could talk about all week, let alone in a few minute segment. The other thing to consider, though, in this particular situation, and any time you have some historical issue like this that's going on, it is extremely complex. People want to try and simplify everything, and people always want to, like picking out Bible verses, twist and contort the context to suit your own agenda. But know that this is a very complex situation, and it just isn't one or two things that's driving the price of silver. But from a high level, what are they? Well, bottom line is we are in at least some semblance of a commodity supercycle, because, it's just not silver. Look what's happened to the price of virtually all the metals and most commodities. Whether you're talking gold, silver, copper, cobalt, uranium, just about everything but oil is at or near record highs. And a lot of this, not all of it, again, because this is very complex, but a lot of it has to do with the building of data centers, everything that's going on with artificial intelligence and the expected demand in the future, the near future. And that means increased electrification of virtually everything. And not only because of data centers, but also specific to the United States, the reindustrialization that's going on that, we've been talking about for a long time. All these things require more energy, and things like silver that are very efficient at conducting energy are critical components. Beyond that, and to make matters worse, China has recently been clamping down on their export restrictions of industrial-grade silver. And keep in mind, China is the number 2 exporter of silver. They are the number 1 refiner of silver, and they are also the number 1 consumer of silver. And so this is kind of like another rare earth magnet moment with China, where they're trying to throw their weight around and deny other countries access to silver because China wants to dominate industries like, electric vehicles, solar panels, and other such products that consume a lot of silver, and they want to keep their price advantage by restricting raw material availability. Now, moving away from just pure industrial utilization, silver is really having its moment in the sun because it's really a catch-up trade. What I mean by that is silver has drastically lagged behind and underperformed gold. And I'm not talking just, recently. I mean going back the last 20, 30 or more years. But it has caught up and surpassed to where now the silver-gold ratio is somewhere in, say, the mid-40s. I think the record is in the 30s. So we're close to about as expensive as silver gets in comparison to gold. And to put that in perspective, from probably about, the 1990s through most of this century, that ratio was in the 60 to 80 range. But just as recently as last year, it had spiked up to 120 times, right? Meaning that gold was 120 times more expensive per ounce than silver. So again, this is a catch-up trade because silver's been neglected for so long. And along those same lines, I mean, we're talking about industrial utilization, but consider investing in jewelry. You know, a country like India has a very strong cultural admiration for gold as an investment, and they do it in the form of jewelry. Well, gold has gotten so, out of price in the last couple years, and like I say, 120 ratio last year, that many people in India have been forced to substitute silver for gold. And their demand is off the charts. So that's something that this past year has really pushed up the demand for jewelry-grade investable silver in India. Something else to think about in the price of gold as we've gotten up, to and above $100 an ounce. And this is where the large number distortion comes into play. When silver moved from, say, $20 an ounce to $30 an ounce, it was a $10 move. A lot of people didn't notice it, but that was a 50% increase in price. Now, and recently in past months, as it moves from 70 to 80, 80 to 90, 90 to 100, it happens more rapidly. People start getting excited by those, psychological $10 increments. But really, $90 to $100 is like 10%. This rapid movement in the price, it just causes people to have more emotional reaction to it. It spurs FOMO, fear of missing out, and really all the speculators jump in because they see the volatility. Okay, a couple other things here just in terms of the cause of the price of silver moving up so much. So that takes us to the safe haven factor of silver, which, again, traditionally it's been gold. Silver has been in the shadows, but as gold has gotten so much more expensive, people are flocking to silver as a safe haven asset. This has a lot to do with two major factors, and that's geopolitical instability and fear about the strength of the U.S. dollar. And we've got maybe another government shutdown coming, and so that's pushing people over the edge. And then Trump talks about Greenland, and you have a lot of our trading allies cozying up now back to the Chinese. Listen, this is the way I look at it, and I don't have time to explain it, but neither geopolitical instability nor U.S. dollar weakness concern me at all, and I think it's a ruse in terms of both gold and silver's price increases. And when it comes to dollar weakness, yes, the dollar's down some 10% since Trump's been president. Number one, he actually is constructing it that way. His tariffs have gone up something like in the neighborhood of 17% on average. Well, a weaker dollar is a stealth tariff. So if you do want to create a better environment for U.S. manufactured products, then between the tariffs and the 10% decrease in the dollar, he's effectively now made foreign products at least 27% more expensive. The U.S. economy is not suffering. The Atlanta Fed, whose numbers are always questionable, but right now they're forecasting fourth quarter real GDP could be as high as 5.4%. Let that number sink in. What's going on with silver right now is, I think, more than anything, between being driven by the commodities supercycle and the export restrictions from China, this more than anything reminds me of the Arab oil embargo of 1973. That's when we saw oil prices spike to well over 4 times what they had been, and it really shaped the geopolitical landscape for the next 50 years. We could be seeing this now as far as jumping in and getting fear of missing out on silver prices. Hey, for me, I'd be avoiding it. When you get parabolic moves like this, no one knows where the top is, and historically, you see a 70 to 90% pullback. I don't know if it'll happen this time. It could be different, but I see so many other opportunities within the overall industrial supply chain of the reindustrialization of the United States that I'd be investing there rather than focusing on one commodity.